Hey guys, on this video we're going to take a look at OHGI. The reason I wanted to take a look at this stock is because it didn't quite work out the way it seemed it was going to work out. Um, it was setting up nicely, but it just ended up trading sideways. Um, and the reason I say it didn't work out is, well, here, if you take a look at the chart, if you got in at the open, I mean, and you sold on the second or third candle, you obviously did pretty damn well on it, but I don't trade the first breakout. I always trade only the second breakout and sometimes the third breakout. So let's take a look at Market Watch. So taking a look at the news, there were no news, or at least no fresh news this morning. Last piece of news here was on the 24th, a couple days ago, with OHGI acquiring some company. So no fresh news, but let's take a look at the levels here. So it looks like it opened at 105. Yes, 105, and the it was a two candle breakout. So it reached its highest high at 127. So that's a 22-cent range. Now, when uh when I look at setups to trade, I typically want to trade setups that have a range between um, a breakout range of at least 25 cents. But I was taking a look at this one at the beginning of the day. I was not that confident that it was going to be such a great day for small caps, so I decided to take a stab at it. But so let's take a look. So it's a 25-cent range. Here on the third candle, it starts the pullback. So let's take a look at the high of the breakout and the excuse me, and the low of the pullback. So, well, that's the tricky part, right? Because what is the pullback? Uh, you would think that this would have been the last pullback candle, with this next green candle getting so close to the breakout point, which is 119. So, okay, so we look at 127 and 113. That's 15 cents, I think. Yeah, 15 cents. And then on the next candle, this sometimes happens. Sometimes you get a candle that gets really close to the breakout point of the previous red candle or the previous pullback candle. Sometimes they're green. And the next candle breaks out. So this one didn't quite do it. So we had the next 5 minute candle. That is still considered a pullback candle, a normal pullback candle, because see, it didn't break the high of the previous candle, so I wouldn't consider it a false breakout. But then on this next candle, it does break this level of 117. Now you could call that the breakout, but you know this is 119 here at the high, and this is 117 at the breakout point. So I don't call a 2 cent move a breakout. So this one ended up not working out. It got below the 9 exponential moving average, and from here on out, I mean, it was just not. Uh, it was not a good trade. I mean, it was. Well, it was a good trade because I stopped out, but it was just not the right stock for today, and it was not easy to manage risk, or at least hold your stock for a while. Uh, after 4 or 5 candles of pullbacks, I typically sell. Uh, Although sometimes they break after 7 5 minute candles, but I normally like to see that breakout, within the first 2 to 4 candles. But anyway, kind of just went on this one. But this was the review for OHGI. If you like the video or if you have any comments, please let me know. This is my second video, so any feedback will be appreciated. Have a good one.